All right, welcome back once again. We are still on Malaysian support and resistance strategy. This is part two of our Malaysian support and resistance strategy. So this is how you trade your support and resistance strategy as an advanced trader. So the first one is that you go to the higher time frame, which is your weekly time frame. Go to your weekly time frame. You spot out the reversal zone of our weekly time frame. The first one is here, and we have our reversal zone in this way as well. So you don't need to go to the previous market. You just mark out the recent market, the current market. Then we mark our vertical, our horizontal line. We mark it this way. Then we also mark our horizontal line this way. We also have a reversal spot in this particular point. Then we mark our line as well. And mind you, I said you are going to mark your body of the candlesticks and not the weak manipulation of your candlesticks. So the next one is move to the next time frame, which is your daily time frame. Mark your daily time frame and mark out all those reversals. So we have a reversal zone in this way. This is our reversal point. We also have our reversal point here. So we mark it out. We mark this out and we also mark this out. This is how I trade my Malaysian support and resistance. So the next one is to move your 4 hours time. After marking out your 4 hours time frame, you start trading in your 4 hours time frame. And if you want to trade in 1 hour time frame, then you start from the daily time frame, then you mark your 4 hours time frame, then you pick your trade in 1 hour time frame. If you want to pick your zone from 30 minutes time frame, which means that you are going to start from 4 hours time frame and mark your Malaysian support and resistance level on your 1 hour time frame. Then you pick your trade in 30-minute time frame. That is how I trade on Malaysian support and resistance. Now we are going to start picking our trade in our 4 hours time frame, and we are going to check it from the previous market to identify uh, movement. Now, if you look at this zone, you'll find out that there is a rejection zone in this point. Now, rejection zone in this point when we sell from this edge to this next support and resistance level. And now you'll find out that in this particular edge, there is a candlestick pattern which we call a bullish hammer. A bullish hammer falls on that particular support and resistance level. So after finding out we have this bullish hammer, then we trade to this next zone here. We buy to this next zone in this way. So the next one is that we find out that there is a rejection candlestick here. In this place, you can't win all trade. You will lose some and you will lose. You will win some and you will lose some. But just make sure that your winnings are more than your losses. In this scenario, you'll find out that I'll pick this trade, then I'll eat a stop loss. I'm going to eat a stop loss here. You'll find out that the market took me out in this place. So I'm going to lose at this particular point. But that doesn't matter. So when I get to this side, I found out that the market goes to this point and the market reverses up. So I noted that there is a potential reversal level in direction. There is a potential reversal in the direction of the market. So after figuring out that this is reversing, then I wait for market to break this zone, this our support level. So once the market breaks this zone, I figure out that okay, this market has changed in direction and move towards continuation of its uptrend direction. So what I'm going to do is that I'm going to wait for a retest back to this zone. I'm going to wait for a retest back to this zone. So now after waiting for this retest back to this zone, I'm going to send a pending order in this particular zone. So I'm going to trade from this edge. So my stop loss will be what in this particular candlesticks. This candlestick here that got rejected and take me out. My stop loss will be there, and I'm going to what? I'm going to trade to this next zone here. So the next one, let's check out the previous market as well. You can find out that there is what? There is a rejection zone here, but the market break this particular line. Market break through this particular line, and we are going to miss this entry point in this week. I'm going to miss this trade because this candlesticks in these 4 hours is too long for me to cash or for me to enter the trade. Now let's go to the next one. We have a strong rejection candlestick here, very strong one, in which the body of the candlestick closes below that resistance zone. So what am I going to do is that I'm going to place myself and my stop loss above a pips above this rejection candlestick here. A few pips above this rejection candlestick and trade to this what? To this next zone of our 1:6. So we have another one this way. You can see a candlesticks. A chart, a candlestick pattern. We have a candlestick pattern, and we also have a chart pattern where we have the head and shoulder. You can see the head and shoulder. This is the head, this is the left shoulder, and this is what? The right shoulder. So after finding out that I have the right and left shoulder, and I have these candlesticks here, we have what we call a neck of that chart. This is the neck of that chart. So I'm going to set my pending order to buy stop. I'm going to set it here. And my stop loss will be what? At the bottom of that egg. Now I'm going to trade to this zone here. I'm going to trade to this zone. Or you can probably set your stop loss below is your resistance zone and have your what? 1:6 to reward ratio. So we also have the previous market where we have a rejection zone. Let's see if we can have a rejection zone on this edge. So you can see we have another rejection zone here. We have a rejection zone here. We have then what? We trade up. We trade to this zone. And after trading to this zone, you find out that what? There is a breakout of this zone. There is a breakout of this zone. Then you wait for the test. You wait for the test because we have something we call the fair value gap. Now you can see there is a fair value gap in this way. You can trade the fair value gap then what? Because that is the point where there is a tendency of market to reverse, to react and reverse. Then you trade to this what? To this next zone here. You can see trade to this next zone, and that is how I trade my support and resistance in Malaysian. You can check the previous video for more explanation where I explained the Malaysian support and resistance. So in the next class, we're going to be talking about other strategy where you can apply to trade the forex market.